Hi, and welcome to our end of June update from the Wealthy Doctor Institute, physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show you just a few ways where just a few adjustments each year can help build and protect your wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to the concepts in this book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So in this video, we'll review our systems, starting with our safety belt systems. Then we'll go on to our momentum rotation systems and see how these can dovetail together with the safety belt systems to produce a combined system. And then we'll look at the free sector surfer strategy that comes with any sector surfer subscription. And then we'll remind ourselves of the rules for the stock tip strategy. So let's get going. So when we review our systems, we'll start out with our stock market safety belt systems. So in my book, I described a 20-month simple moving average system. This system, think of it as a safety belt for stock market investing. It helps to differentiate when it's relatively safe or dangerous to be in stock market in general, and whether or not you want to invest in that particular index or some other stock tip or what have you. At least you have some idea whether or not it's relatively safe or dangerous to be in stock market in general during that period of time. Now, it's a safety belt, but it does not guarantee against all losses. And in fact, in order for our system to detect when the markets are beginning to become dangerous to begin with, we have to take some losses to begin with. But the whole point of having a safety belt system is to get out early enough to make a difference. This way we can increase our chances of survival during a stock market crash. So, for this particular rule, all we do is calculate out the 20-month moving average of the S&P 500 index. In other words, take the average price of the S&P 500 index fund, corrected for dividends, for the last 20 months. And as long as the index fund is above the moving average, it's relatively safe to be in stock market. Otherwise, get out. So here's a graphical representation of what we're trying to do. If the blue wiggly line is the S&P 500 index mutual fund, corrected for dividends, and this red line is the 20-month moving average, then we see that this month the Vanguard S&P 500 index mutual fund ended at 271.41 per share, and our moving average went up to 252.80. So, for those of you who like to do this kind of math, which is not necessary but interesting to find out, we have a 7.4% cushion. In other words, the S&P 500 index can drop up to 7.4% by the end of next month and still be relatively safe to be in the markets. So if the markets go up, sideways, or go down a little bit, we're still okay. But if by the end of next month the markets drop below this red line, then next month we'll get out. But for this month, it's still safe to be in markets. And here's Sector Surfer's version of the safety belt system. Sector Surfer calls its system StormGuard Armor. StormGuard is its system. StormGuard Armor, or more precisely StormGuard Armor Plus, is now its latest iteration. And you can see how if you use the pure one stock, one bond fund system, we had a signal to get out of stocks beginning of June. So that's exactly what this system did. Now some of you probably have systems using StormGuard Armor Plus where you got out of stocks beginning of June, but then after the first week of June you got back into stocks. That's okay. StormGuard Armor takes into account your particular choice of funds or ETFs while making its determination whether or not it's relatively safe or dangerous for you to be in the stock market. And for many of you, during the second week of June, we got back into stocks. And just to take a look at the StormGuard Armor indicator itself, you can see how here's June. It was negative in the beginning, but then all of a sudden shot back up to barely positive again, and that's where we've been for the rest of the month of June. So as long as StormGuard Armor is positive, it's relatively safe to be in the stock market. So although we didn't get a trade alert for the end of June, keep in mind that some of you probably got a trade alert somewhere in the beginning of June, not at month beginning or month end. So remember, monitor your own sector server strategy. So the next system I'd like to review is the momentum rotation systems. Now, in my book, I described one in particular called the MRI, the Monthly Rotation Investment System. I no longer use the rotation system as described in my book. And for those of you who are still following the book, remember, all this is taking 3 sector mutual funds, including the S&P 500 Index Mutual Fund, the Emerging Markets Mutual Fund, and the Inverse S&P 500 Index Mutual Fund, and then either every month calculate which one has the best momentum or run through Sector Surfer. However, if you did run these through Sector Surfer, because it already has an inverse mutual fund, you would not need a StormGuard filter, because the inverse fund is its own risk mitigation system. However, as I said, after rigorously backtesting even the Sector Surfer version of MRI with other Sector Surfer system, I am no longer covering the MRI system, either version. However, I will at least show you how Sector Surfer can rotate funds its own way. So for instance, here we have a list of mutual funds ranging from total stock market, large cap, mid cap, small cap, emerging markets, real estate, and long-term treasury funds. If we were to just rotate through these funds and figure out which one fund had the best momentum any one month, we would just buy that one fund and hold it until another fund became dominant. And we would make around 4 trades per year based on this system. And by doing so, we would get this yellow line, which, if you take a look at the white line as reference, that's the S&P 500 index, we can smooth out these big dips in the markets in 2000 and 2007. If we just did that, we can help protect the value of our accounts. Furthermore, if we were to incorporate StormGuard Armor, this one has no StormGuard Armor, if we were to use StormGuard Armor to differentiate when it's relatively safe or dangerous to be in the stock market and rotate only through the stock funds during safe for stock market phases and go to the bond fund when it's dangerous to be in the stock market, we could straighten out our curve a little bit more, make it less volatile, make it less nail-biting, and as a result improve our returns. Again, past performance doesn't guarantee future results. I'm just showing that if we can at least avoid or minimize the larger losses in the stock markets, we can improve our overall investment performance. So for those of you who are subscribing to Sector Surfer or thinking of subscribing, remember, Sector Surfer does come with a free strategy. Now, these free strategies aren't that great. They use generic asset class funds. They use an older version of StormGuard. They don't separate out stock from non-stock funds. There are ways to tweak the free strategies to make them better. However, once you tweak them, you have to start paying for them. But at least I can review a free strategy for you and show you what you might possibly do, especially if you're relatively low on funds and cannot afford a subscription. So for instance, in this particular free strategy called My ETF Asset Class, there are several ETFs that are fairly generic. It uses an older version of StormGuard and it goes to cash when it's dangerous to be in the stock market. And by doing this rotation, trading maybe 3 times per year, over the last 24 years, if the white is S&P 500 index, we can straighten out this curve this much and improve our returns this much. Again, past performance doesn't guarantee future results, but if results like this is great enough, then there's no reason why you need to pay for a subscription. So our next system is our stock tip strategy system. The reason why we have stock tip strategy rules is because some of you absolutely positively have to buy certain stocks for some strange reason. So when you do that, keep in mind there are ways to help mitigate risk. I don't particularly suggest buying individual stocks because individual stocks have their own idiosyncratic risk. Specifically, if you have stock market moving news specific to that stock, and overnight you cannot trade that stock, and in the morning that stock gaps down and you lose a lot of money, there is no way we can protect against that kind of loss. That's why I suggest against holding individual stocks. However, if you still are adamant about buying individual stock, at least have some kind of rule system, and here is just one example, the one I described in my book. One rule is, if you really want to buy that individual stock, limit your risk to just 1% of your total portfolio. So, what does this mean? If you were to use a 25% trailing stop loss order, that means you can use up to 4% of your trading account to buy that one stock. This way, when it loses 25%, you only lose 1% of your total portfolio. So that means, for instance, if you have a $100,000 portfolio, don't use more than $4,000 to buy any one stock. Now, when you have a trailing stop loss order, as the price of the stock goes up, the trailing stop also goes up. But when the stock price goes down, the trailing stop does not move. It ratchets up to lock in gains until finally you're either stopped out or stock keeps going up and you keep locking in more gains. There's no guarantees that the stop order will protect against big gap downs, but at least it's something. So if the stock goes up 33%, go ahead and buy another block of stock using another 4% of your account, and then update your trailing stop loss order to reflect their increased number of shares. You can keep on doing this until either your whole account is now in this stock because it went to the moon, or you get stopped out, usually the latter. And this is one way you can invest in a stock that could potentially go up and yet keep your risks relatively low. So, in summary, we reviewed our systems. We reviewed our safety belt systems, including our old system in our book and the new StormGuard system in Sector Server. We reviewed how momentum rotation systems work and how we can integrate that with our safety belt systems. We examined a sample-free sector server strategy, and then we analyzed our stock tip strategy. Keep those questions coming. I know I talk to several of you personally each month, and I realize that for some of you, these video updates are not enough. Especially if you're still unhappy with your current investment strategy or lack of strategy, I'm going to offer a complimentary investment checkup session for you, just you and me. Ask all the questions you want, no matter how seemingly basic or clueless you think you are. In our checkup session, we'll together create a sense of clarity about the financial future you really want, why you're investing in the first place, the reasons, discuss investment building blocks that are more specific to your situation, determine what has stopped you in the past from getting the results that you wanted, identify what are the most important steps you need to take now to get to your investing financial goals, and then complete our consultation with the excitement of knowing exactly what to do next to create that road to the future you really want. Think CME, only the topic is financial, and tailored to you. Think wellness checkup, because whether or not you feel financially well, if you had a financial cancer or blind spot you didn't know about, wouldn't you rather at least know so you can deal with it before the problem grows and metastasizes? Don't be bashful reaching out. The more you delay, the more time is against you. So, until next month, invest safely.